Hello and welcome to another trades and tutorials video. In this video, I am going to stick with a theme that I've talked about in the last couple of videos, and therefore you might want to go back after this video and look at the last couple of videos that came out before this one. But the big picture here that I want to cover is one that is a couple of topics. January has just given us a great opportunity to distinguish between the good stocks and the bad stocks. The location of the markets is also one in which volatility is almost assured, and that will also create opportunities to buy good stocks on pullbacks. And more specifically, the pullback today is right into the area where you'd expect it to be. So this is pretty timely, and in this video I'm going to go over about, I don't know, half a dozen stocks, ETFs, to be focused on over the next week or more as opportunities that have kind of raised their hand based on these factors and said, hey, focus on me, because unless the market completely breaks down, I might just completely take off. All right, so before I go over all that, I want to make sure anybody who's just finding us on YouTube knows that one, please subscribe to our channel, and two, you can find more information like this at marketgauge.com/tutorials. You can also find it on Twitter if you're a Twitter follower at the handles of @MarketGauge and @MarketMinute. And finally, make sure that you're watching this in HD. The setting is in the lower right-hand column, lower right-hand corner of the video. And so, if after you watch this video, the video in particular I would go back and watch if you didn't already see it is this one. And here's a trades and tutorials. That's where I was just pointing you to. And this is not all about Oprah. The commentary is, but the video is actually about 4 markets and 6 indicators that you should be watching. And that will give you more of a bigger picture of what I'm talking about here. I'm not going to go into it as much here. And the other bigger picture is in this video here. But if you just go to tutorials, marketgauge.com tutorials, you may even be seeing this on this same section. Check those out after this one. And the only reason I'm saying that is because I'm going to tell you in a very short way why S&Ps and Qs and IWMs all look very interesting on a pullback here. And I'm only going to do it with the S&Ps just so that I can get to the stocks. So S&Ps are sitting right at a really significant level of support in here. These are the August and September, let's call it the flash crash lows. So right where you'd expect it from a technical point of view to hold. Now, that doesn't necessarily mean that you just buy it down here hoping. The other thing that's happened is it's come back over this green line, which is the 10-day moving average, consolidated, and then broke out on Friday. So it broke out, now it's just pulling back from that breakout. So long as it can hold this consolidation in here and turn back up, this thing is looking like a classic bottom. Now, bottom may only mean that we come back up into this area, but while the market's doing that, if you know how to read market phases and read phase transitions, the market is, I'm not going to say full, but there are certainly quite a few stocks that, as I said earlier, are raising their hand saying, keep an eye on me because I'm in great shape to really run as long as this market doesn't collapse. And the key will be 2 things. Where does the chart or the ETF or the stock stand with respect to its phases? And you know, if I'm saying phases and you're not knowing what I'm talking about, one, Mish is going to do a webinar this Thursday at 8:30. We haven't announced it yet, but keep your eye on your inbox. Reserve Thursday, 8:30 in the evening Eastern time. It's free. Mish will explain what we mean by phases and how to trade the phase transitions. But for this video, a phase is really looking at where the 50-day moving average, this magenta, and the 200-day moving average, the gray one, are stacked, and how the price action is going through it or pulling back to it. So in the overall market, and this is key, in the overall market, the phase is bearish. The 50 is under the 200, price is below that. It's the trend is down, right? I'm telling you that it's bouncing, but the trend is still down. So if you can find stocks where they're in a bullish phase or they've pulled back to these moving averages that are positive, those are the types of stocks you want to focus on. And then there's the second thing. And the second thing, which I've covered in other videos, is that January was a gap down and then a collapse. Now, any stock that is now trading at new highs for the year, not necessarily 52-week highs, but new highs for the year, is raising its hand and saying, hey, I know 2016 has been bad, but I don't care. I want to go higher. And that, you put that together with your phases, and you got a really powerful combination. Obviously, this doesn't work all year long. It's going to work at the beginning of the year where these things get in alignment. It's going to work particularly well in years where you have a beat up January. So it's kind of a little, trick, as they say it in this industry, not really all that tricky, that if you know it, can really make it easy to identify great stocks. No. One last thing, and then I'll get to those great looking stocks, and that is TLTs. So TLTs are interest rates. And this is kind of like what could turbocharge this if it happens. TLTs, interest rates, or really these are the bonds. So when the TLTs are going up, means bond prices are going up, means interest rates are going down. Now, lower interest rates is better for stocks as long as they're not getting lower because people are panicking. Today looked more like a panic in the stocks, and this is a flight to quality. But we're in a situation right now where, as long as the market view is one that growth is going to remain slow, maybe it's slowing a little more, but it's not going to go negative, that provides a situation where interest rates could actually continue to go lower, meaning bonds. Interest rates continue to go lower as the bond prices go higher, and stocks will move favorably. So you could actually be in stocks and TLTs and be right on both of them. Not only that, if you can kind of work your way into it, you could be in TLTs in case stocks go lower. Boil all this down, TLTs are in a bullish phase right now. Trade them from the long side, not only because they could be a good hedge, but because they might just go up regardless of what stocks do. Right? You can't always say that about interest rates and stocks, but right now you can. So this is a great time to be focused on them. I'm not saying buy them up here. Wait for a pullback if we get one, and buy it on a good reversal within the pullback. All right. So with that said, let's go take a look at some. I'll start with a couple interesting ETFs. Now, XLU Utilities is one that I talked about again in a previous video as being really compressed, and you want to watch this thing to potentially move higher. Now, the other reason that I would say that is because, look, it's in a phase transition where it's going from one side of its moving averages to the other side. Now, yes, it's exploding higher because the interest rates are going down, bonds are going up, so it will very often follow that. I wouldn't buy it up here necessarily, but the trend in this looks like it could be turning to the upside. If it pulls all the way back down to here, it might actually be an opportunity. So keep an eye on XLU, and more importantly, it's this kind of price action that you can look for in other ETFs or stocks to be an indication that an explosion to the upside just might happen and could very easily happen. So here's another one that I've been talking about, XLP. Okay, now in terms of the January situation, look at XLP. Gap down like everybody else, went straight down like everybody else, except when it did that, here's its 200, here's its 50. It's still in a bullish mode in terms of the moving averages. We don't call it a bullish phase when it's down under the moving averages. That's going to be a warning or distribution phase. But when it comes back through that moving average and comes back up to positive territory for the year, now this is one you want to pay attention to. If this consolidates between its high of the year, it's over the high of the year, right? And the 52-week high, this is what I describe as raising his hand saying, hey, keep an eye on me because I would like to go higher. If the market collapses, look, this thing is part of the market. It's going to collapse with the market. But if the market works its way higher in a volatile, frustrating way, this could work its way higher in a much less frustrating way. Let's look at some stocks. ICE. You probably get the hang of this right now. Now, one of the things Mish talks a lot about in her webinars is this transition from below moving average to above it, and patterns that you can focus on, and confirmation to know that it's broken and going to move higher. And this was a perfect example that not only was coming through the moving average, but where's its high for the year? This is the high for the year. So where everybody else would be looking and flagging it when it's at a 52-week high, I'm telling you to flag it visually when it makes a new high for the year. All right. As soon as it did that, exploded higher, still very strong. It's got an inside day pattern now, right? So if you're a slingshot customer, you know exactly what to do with that. And a really good example of pretty much everything that we're looking for. Not to mention when it pulled down in January, it wasn't pulling down to its August lows. It was pulling down to an upwardly sloped 200-day moving average. Now, don't look at this and say, oh, well, I already missed it, because this pattern is going to reoccur. And this pullback could be that the 50 comes like this, the market sells off, but this one only comes back to the 50. That's what you want to look for. All right. Now, another pattern to watch out for, and Walmart's a great one, so keep an eye on Walmart, is something that did completely opposite of the market. So look what happened to Walmart this year. Walmart opened lower with the rest of the market, but by the end of the first day, it was actually unchanged, maybe up a little, and then it rocketed higher. Sometimes stocks, ETFs, just completely change with the new year. But it was not immune to the market's insistence on going down, and it got pulled down, right down to a positively sloped 50-day moving average sitting at the breakout level. When all these things come together like this, you want to pay attention to it. Again, this isn't to say you missed it. This is the type of pattern that's going to reoccur over the next several weeks, several months, especially if the market is volatile. Now, if you were a buyer down in here, you're taking profits at the 200-day moving average. Not everything, because this could be another interesting transition through the other side of this moving average, and it could continue to move higher. I would not be surprised to be looking at Walmart later this year and seeing it as one of the better performing stocks in the market based on the way it has acted at the beginning of this year. Starbucks. Can you see the theme here now? All right. Here's where we opened in January. Here's the high for the year. January pulls back to the 200-day moving average, much stronger than the overall market. Just the other day, it takes out the 50-day moving average. Now it's sitting above it. This is a stock you should be paying attention to if you want to be long something. All right. Again, this is the kind of stuff Mish is going to cover in the webinar this Thursday at 8:30. So pay attention to those phases, moving averages, where we are relative to the new year. Now here's one, and I'm almost done, that I find interesting because it's not necessarily a new issue, but it is a new issue. It's the combination of Heinz and Kraft that Buffett and the other firm put together. Now Warren Buffett's in it, so some people would say that's a great start. Quite frankly, I don't care that Warren Buffett's in it unless the chart looks good. Just so happens the chart looks, really good. And look at its January scenario. Sold off like everything else, held at support, and came back through that 50-day moving average, right? Broke out to new highs for the year. Inside day today, consolidation right at the breakout. If the market starts to head higher, this could be a great low volatility stock to follow to the upside. So hopefully you're seeing how I'm putting all this together. None of it is all that complicated, and it's not like the market's full of these opportunities, because the market's still in shambles in terms of the number of stocks that are below their 200-day moving average, 50-day below their 50-day moving average. But all those stocks are going to eventually come back. And the first ones that do are the ones you want to pay attention to. I've said that in other videos leading up to it. The more I say this, man, I put out quite a few videos in the last several weeks, all with the same theme of how to identify the stocks that are the ones you want to focus on the upside and take advantage of this decline. Don't assume the decline is going to hold. Just be prudent. Put in good stops. And if the market collapses, then you'll get stopped out. But if the market doesn't collapse, these are the stocks that are going to take off. All right, so DLTR, this is the last one. So you should get it by now. Here's where we started. Here's the high of the year. Pulls back in January right to a positively sloped 50-day moving average. Comes back, consolidates, moves to positive, pretty much positive on the year here. Breaks out. And now, if I show you the big picture, this thing looks like a, some would probably call it a cup and handle. I'd agree with that. And more kind of mundanely described as great consolidation right below an all-time high in a scenario where the overall market looks like not very good. Let's just leave it at that. All right, so I hope that helps. I hope you find an email that will enable you to get to Mish's webinar this Thursday, and I'll see you in the next video.